Okay, let's start. Good morning and good evening, everyone, or maybe good afternoon. So my name is Jianggan. I'm the CEO of Momentum Works, and welcome to this session about Southeast Asia tech investment in a global context. So here, I think I have my co-conspirator, Dmitry, with whom we have been doing a number of events across the last year and a half, where we're trying to look at, how things go in Southeast Asia, passing the industries and finding trends, counting the dollars, etc. I think in 2022, we're trying to be a little bit more ambitious. We're looking at how things are going across emerging markets and what do we find in common, and what are the differences in pathways, and how we can learn from each other, basically. So we prepared this presentation, which is based on top of our report, and the presentation will probably take about 45 minutes, and we're leaving a bit of time for question and answer. Feel free to ask your questions in the chat box, and here I'm just a little bit introduced. Nana, can you help me mute people who are not supposed to be talking?
Yes, on it. Brennan, Fion, can you help me?
Yeah, sure. Thank you. So we have me and Dmitry, who I've briefly introduced, and we also have a special guest, Rui Ma, who has been. Rui, do you want to introduce yourself a little bit?
Yeah, sure. Hi, everyone. My name is Ray. I'm joining you from the Bay Area, Silicon Valley. And I used to work in China for almost a decade. That's when I met Dmitry. And I did, investment banking, private equity, and venture capital there. And nowadays I run TechBuzz China, which is a sort of media plus community for investors. And I'm actively investing into Chinese tech companies. So hope to add to the conversation here, and thanks for inviting me.
Thank you, Ray. So before we start, for all those of you who are celebrating the Lunar New Year next week, wish you a happy and prosperous year of the tiger, and finally there's some good spirit after 2 years of the pandemic. Okay, we have the whole presentation based on this report, which benchmarks Southeast Asia versus Latin America tech development pathways. And the report is available in 3 languages, English, Chinese, and Spanish. So feel free to download a copy. It's complimentary. A little bit about Momentum Works. We have been active in Southeast Asia for a number of years, building ventures and also building a community at the same time. And since we exited our largest venture beginning of the pandemic, so we have been doing a lot of things along the ecosystem. So we put our experience, knowledge, and community to do a number of things, and insights is a key part of what we do. So you will see us publishing a number of reports every month, and just trying to give people understanding about what's really going on in the market. And as we have explained, this year we'll do more work about LATAM because we see fascinating things going on there. A bit of I think I can skip this. Our community is really spanning across various companies across different geographies. That's where we draw our inspirations, and our knowledge. Many of the reports that were published, actually most of the reports we have published are complimentary. They try to give people understanding about specific sectors in specific regions, as well as the specific companies which I think generate lots of buzz, but there isn't much talk about. What's the inner workings and how they really adopt the strategy that they have. So feel free to download these copies. It's available at the insights.momentum.asia, and I think most of the reports here are complimentary. Over to you, Dmitry. Introduction about Cento Ventures.
Sure, a little bit about ourselves. So I still is AVC, live here in Singapore, and focus on Southeast Asia for last now more than 10 years. With a tiny little bit of aspiration of one day learning enough about LATAM and Africa and Middle East to go global. But for the moment, spent last decade learning from the founders with back, trying to understand the workings of Southeast Asia, and as a byproduct of that, nothing as spectacular as Jianggan's crew, but we did spend a little bit of time gathering data about the market and processing it into not quite easy to read charts. So you can help yourself to those on our website. If you click to the next slide, you will see some of the work we've done over the years. And yeah, the next slide will have a bunch of cool logos of companies that we have a pleasure of working with. And back to you, Jianggan, on the report itself.
I almost feel we were talking just now. You sounded like Amado Carrillo in Narcos, but anyway, the accent.
Hey, I modeled myself after some characters from Breaking Bad, but hey.
Anyway, so first, a key question that I mean I have been debating with my friends: will Shopee become a direct competitor of Nubank? And of course, I mean both companies have become public, and both companies are, I think the forefront of tech, consumer tech in each country. But essentially, we'll go into a little bit of detail, but they represent a very different pathway that Southeast Asia tech and Latam tech have gone through. With now Shopee aggressively expanding into Latin America with C-Money, a key revenue generator based on top of the e-commerce traffic, we feel that sooner or later, maybe very soon, they will be going after the same customer base, and you will see some interesting dynamics happening there. And throughout this presentation, when we explain the pathways of the two different continents, and you will probably get a better sense of why we are saying this. Things we will address today. So of course, first, why we're doing that, and the macro similarities and differences between these two regions, and the differences in development pathways of key sectors across two regions. We're looking at super apps or multi-vertical, as we call it, e-commerce, logistics, and a few other sectors. And of course, what's next? Whew.
Can I chime in on just one more thing before we go to the slide?
Yes.
If we could click to the previous one. So this has been a work of love and a product of a debate over the course of a year, because it's really not quite common, at least for Southeast Asia ecosystem, to care much about anything beyond North Asia and India and probably the US. So LATAM, Africa, Middle East, they're just not the topics of local conversation. But it would seem, and now it's quite obvious from the numbers too, that LATAM and Southeast Asia seem to be converging on the same set of templates, and they're different in different industries, and the speed of arrival to this convergence is different. And there is no particularly interesting debate going on about that, just a couple of podcasts here and there. So from practical perspective as a VC, we just want to go and see if we can cheat by learning from the slightly more advanced markets and figuring out what future of Southeast Asia holds. But I'd also say it would be very useful for the founder. I hope it would be very useful for the founders in both markets to see how alternative futures stack up and how, based on different parameters from which different countries start, business models go this direction or that direction. And that's one thing. And the other thing is just a caveat that work today has been built on top of the data we've gathered for Southeast Asia. So I know how it was gathered. So I'd say 70, 80% confidence. And based on very good works of Latin America Venture Capital Association, LAVCA, who've been building fantastic reports about LATAM. Having said that, very superficial level of insight so far into valuations, into that side of things. So take what we say with a significant pinch of salt. We'll try to improve in the second half of 2021, which we're crunching right now. And we're in the market for contributors who will tell us how wrong we are on LATAM. So folks on the ground in LATAM, please make yourself known. And one day we hope to extend this effort also to Africa and Middle East. So if you're in one of the hubs there, get in touch. And then the next slide is actually the caveat number 3, which is everything we've done was done in December before global capital markets did this. So probably we'll test, I would even say stress test some of the theories that we will propose today. But with that, Jianggan, sorry for interruption, back to you.
Okay, I'll not go into too much detail about the carnage that's happening now. We have our own theories, but that's probably worth another discussion at some point down the road.
You say carnage, anyway. I say return to sanity. Do go on.
Okay. Anyway, so let's start with a bit of a macro overview about these two regions. So this is a map that we like to use in lots of our presentations. So it essentially shows the population density globally. And of course, we are talking about tech, especially consumer tech. You have to go where the consumers are, and you have to go where the consumption power is. So we look at these two regions, Southeast Asia and Latin America. They have a pretty big combined population. And although if you look at Southeast Asia, it's much more dense compared to Latin America. In terms of tech, I would say that Southeast Asia has developed has with a much longer duration compared to Latin America. So if you look at a number of companies, I mean, starting from a number of companies which went public and or which have achieved very high valuation. We have Agoda, Sea, Gojek, Grab over the years. And if you look at Latin America, aside from a few companies in the first wave of e-commerce and classifieds, Nubank and Logi pretty much appeared in 2013, and then there's a surprise new player called Kavak, which has achieved, I think, 8-point-something billion valuation. But essentially, both regions are now in a center stage of global emerging market development. And I think we tracked 4.1 billion VC investment in LATAM in 2020. If you look at the latest number from Lavka, I think the 2021 number they tracked is about 15 billion. So without caveat, I think that's like 3 times increase, and that shows, I mean, how much opportunity that investors are believing in this market. But of course, whether these opportunities are justified, where are the opportunities? This is something which also forms part of what we are trying to do throughout this exercise, which will probably last more than a year. Okay, a bit of similarities. So when we compare these two regions, essentially we're dealing with 6 large markets in each region, and there are a bit of similarities in terms of population, more or less similar across the 6 countries, and both regions are immediately adjacent to the south of superpower, and then you see that there's a strong influence over the pathways, and because of the business models, because of the talent, and because of the capital from the superpower up north. If we count PPP terms, the total GDP of these 6 countries are pretty consistent. Although Southeast Asia has registered better growth for the last 6-7 years compared to Latin America. We counted 2020, I think there was a dip in both regions. Some people would argue that because the economy is not really growing in Latin America, there are more structural opportunities for startups to disrupt, but then we'll leave this to later. I mentioned that Southeast Asia is denser. And one indicator is that you look at the flight time between the 5 capitals. In Southeast Asia, it's 3 hours. And of course, that's before the pandemic when people could travel. But pretty much you can do a day trip from a capital to any other capital and still make it back on time during the day. For Latin America, it's a little bit more spread out, but they compensate that by having very similar culture, and with the exception of Brazil, all the other major markets share the same language, which makes things a little bit easier. At least you can communicate with your executives more or less based on the same culture and the same language. We also did a little bit of diving at the country level to look at the similarities. And of course, in both regions, you have a large resource-driven country that's boasting about half or slightly less than half of the population. In the case of Southeast Asia, it's Indonesia. And in the case of Latin America, it's Brazil. And both countries are obviously the largest economy in their respective regions. But also we see other similarities. For instance, Malaysia and Argentina. So both countries are of a decent size, are relatively advanced in terms of GDP per capita, has not been growing for a long time, and generated the first generation of internet companies, as we see it. So you also have Singapore and Chile, which are relatively wealthy, small, and I do believe these are the only 2 countries which do not completely fulfill their quota about immigration into the US. So basically, if you are from Singapore and Chile, getting a US visa is pretty straightforward. Then of course, now as I said, I mean, people go for where the population is. For the past few years, Indonesia and Brazil have been attracting most of the venture capital in their respective region. We've been trying to find out, I mean, how the dynamics work, and of course, in both regions, it's basically a web of mega cities, and in each big country, you pretty much have like 1 or 2 cities which have a significant percentage of the population. That's quite different to the case in China, US, or India, where you have a cluster of cities, each of which are pretty big. So what is the regional center? I think for Southeast Asia, there's no doubt that Singapore serves its role, being a small, relative, neutral and prosperous country with a good legal and financial system. So this is where many of the regional companies choose to base their headquarters. In Latin America, it's a little bit nuanced. We know that in the past, in the age of MNCs, I mean, many American companies choose to base their Latin American headquarters in Miami, and but now it's a bit more nuanced. It can be Mexico City, it can be Bogota, it can be São Paulo. But I think because Brazil is the largest market, there's a lot of activities in São Paulo. Over to you, Dmitry. You have been counting dollars and cents. You know where the money has been flowing.
Yay. Sure, I'll try to make it.
I think you're on mute.
Somebody just muted me. So by the time we got to this report, we only really had the first half of the year tabulated. Now we haven't yet got the rest of 2021, and it will be spectacular. We have some indications from other sources, though. So let me comment first on what we do know. What we do know is that Southeast Asia, as of first half of 2021, has been overtaken by Latin America in terms of investment of venture capital. And looking at CB Insights, at Deal Street Asia, at LAFCA, at all of their preliminary reports, it's kind of hard to see how the rest of the year plays out. It looks like Southeast Asia might end up slightly ahead of Latin America after all. But then we have the Delaware of Asia here, Singapore, and Singapore ecosystem tends to claim revenues from other regions as its own. So once we've done adjustment for that, I think the regions will be neck and neck, which is to say that both regions, investment-wise, are in the same weight class, but Latin America undoubtedly is moving faster from a lower base. And now if we were to go to the next slide to see actually what are the breakdowns of investment flows, much more detailed breakdowns available in the actual report, but the two things I would call out here are these. One is that what LATAM seems to be going through right now might have already happened in Southeast Asia back in late 17, early 18. After years of drought, suddenly a waterfall, an avalanche of late stage rounds, which we call mega deals, 100 million above per deal. And while in Southeast Asia in 2017 and 18, that mostly went to roll-ups of local services and a few wallets and some classifieds, Property Guru, and a couple of things in fashion, Zilingo, I think. In LATAM, undoubtedly the driving sector is fintech, and we will talk about that a little bit later in the presentation. The second thing I wanted to call your attention to is just how little compared to Southeast Asia, LATAM's non-mega deal stack, how little capital that particular subset of VC ecosystem had access to. You can see that all the VCs deploying capital into under $100 million deals, less than half of Southeast Asia up until early 2021. And that, I wouldn't say a lack of access to capital, because obviously most of it concentrated in Brazil, so going in São Paulo was good for quite a while, but most parts of LATAM and most parts of the industry in LATAM seem to have or have had over the course of last 10 years, rather less capital to play with compared to their Southeast Asia peers. And you will see sector by sector how this shaped business models and perceptions and the speed of growth quite differently. Moving on to the next slide. Oh yeah, the classic one. So the largest economy, or the economy that is perceived to be largest when it fully digitizes, captures half to 75% of the spend. Singapore and Mexico holding solid second positions for vastly different reasons. And spare a thought for Uruguay, which is apparently one of global leaders in software export per capita and doesn't even get a mention in LAVCA data. Oh well, moving on. If we go to the next slide. Yes, so where does the capital actually go to? So you can see that probably because of timing of the surge of funding into Southeast Asia, the leading driver here and the leading narrative is what I continue to resist calling super apps, and we will talk about that in a moment, and what I continue to insist on calling multi-vertical players. Pretty much businesses that collate local deliveries, transportation, a variety of local services, anything that densely populated city needs, and pull it together into a portal of the mobile era, if you like. And then solid second narrative has been around for 10 years is digitization of retail, driving e-commerce, driving logistics, and driving all sorts of adjacent loyalty programs, price comparison, payment sectors. In LATAM, decidedly, financial services drive the place, and a little bit of an acceleration in logistics, which we will talk about in a moment, as e-commerce in LATAM took a slightly different path compared to Southeast Asia. If we could go to the next slide. The next slide, I think, is where one more comment on, we will now dive into several verticals. Much as we tried, we couldn't quite make the whole thing comprehensive. So we, for example, didn't even try to take on all of the classifieds universe. We just plucked out specific vertical that is used car marketplaces. We, I think, ignored entertainment for the moment, and we did not pay much attention to travel, mostly because we wanted to do a few sectors well. But as we move on with these reports, the wheel will become larger and hopefully more orange. And Jianggan, if we're there, let's add crypto next time around. So starting with the most prominent feature of Southeast Asia, over to you.
Before that, just a quick question. So all the dollars and the cents counted, that doesn't include the 6 billion that C Group got from their public round, as well as the 7.5 billion that Grab got through their PIPE plus the SPAC merger.
I tried to not bore the audience with methodology, but sure. So what is not counted is money borrowed. What is not counted is money that happens to go through public market vehicles. And what is not counted is what we do not see. So deployment of capital into Miami that then feeds into Latin America through intra-corporate transfers, there is just no way to see. Plus, on top of that, I think both LAVCA and us have maybe 50% fidelity on pre-A, as it's just way too difficult to track. So all of this, huge pinch of salt, but directionally correct, I think.
Of course, I mean, that will impact because quite often we see the headline numbers in the press becoming very, very impressive. It's always worth looking at what exactly, in essence, what gets counted and what doesn't get counted. Anyway.
Oh, what's 5 billion among friends? Hey.
Anyway, so super app, as they call it, or regional multi-vertical platforms have been a prominent feature in Southeast Asia. I think started with Grab and Gojek raising significant amount of money between 2016 to 2018 to evolve from a ride-hailing platform to go into multiple verticals, including food delivery, financial services, and more. And of course, both companies raised lots of money, and Grab is already public, so you can see their finances. And Gojek merged with Tokopedia in Indonesia to form Go2, and allegedly it is preparing for an IPO as well. So that feature has been quite prominent in Southeast Asia, and it doesn't exist in it didn't exist in Latin America. And of course, there are a few candidates which are doing something similar, building a local service fulfillment network and trying to add more services on top of it. But the scale of what we see in Latin America is very different from the scale of what we see in Southeast Asia. And of course, I mean, many of the companies here are are modeling after what they see in China, right? I mean, there are lots of talks saying that, hey, WeChat is a super app, Meituan is a super app, Alipay is a super app. That's why we are modeling ourselves after them, because of course they have created lots of value by being super apps. So maybe for this point, I would like to invite Ray to share a few comments. Obviously, you know China much better than we do, and how do you see this phenomenon, and what's in essence is if people say WeChat is super app, I mean, why is it so?
Sure. In the prep call that we were just having, I think I was complaining to Dmitry that, I hate the name super app because I think it is very not descriptive, because effectively, if you say WeChat and Meituan are both super apps and you're collapsing them into the same type of app, that's really not true. If you look at how the apps work and you know, the underlying logic, right? So WeChat is an ecosystem app, a totally sort of free platform. Well, I mean, they have to approve your content, but effectively it's a very open platform. And then something like Meituan is much more, I would agree with Dmitry's name for it, which is multi-vertical platform. And the verticals are decided based on, you know, how much profit it can generate for the company, right, by Meituan. So I would say that there's actually just like no name for a super app in China. The Chinese internet industry does not refer to itself as having super apps, as having platforms maybe. And looking at this graph, I think part of it is because most super apps, right? If you're talking about multi-vertical platforms, it's very, very difficult to make money because if you look at Meituan's evolution, they started off with a high frequency movement of food to get users, and then they had to layer on all these much lower frequency use cases like travel, for example, being one of their more profitable segments in order to actually get to profitability. And that is extremely operationally intensive. It requires you to be really, really good at your high frequency delivery service. And then it requires you to then, you know, go out and expand your business and also accommodate these lower frequency services. I think that in China, you can see pretty obviously that that's just a very labor intensive, operationally intensive business, and no one's really doing it these days, right? Everyone, the trend is now, if Southeast Asia, for example, is following China's footsteps, then I would predict that that's not going to be what people do in the future. And in fact, what they are going to do is going to be much more similar to what ByteDance does, for example, which is just go after the, you know, actually highly profitable segments, right? And then go global with it. So that's the new strategy. The multi-vertical strategy is not in vogue.
And you will be very amused to know that the local aggregators of services, they're still at the stage where they're saying, yeah, ride hailing will lose money there, but food is the salvation. So yeah, but right now I think
that's not that definitely, you definitely don't make money off of that. Yeah. So.
But there is an additional narrative riding on top of that, which is, but like, once we've lost enough money on ride hailing and food, it is the lending and the financial services that will save us, which is how it brings us right back to LATAM.
Yeah, well, we can talk about it later, but like, for example, China has severed that connection, so you actually cannot make money that way, which might account for the fact that, which might explain why no one is going that strategy anymore, because you cannot just keep on layering things, and you especially cannot layer on lending or credit.
Yeah, last year China lost its role as an inspiration for business models elsewhere. Regulators woke up and messed everything.
No, I think again its role as inspiration for regulators everywhere. So,
oh dear, don't give them any ideas now.
Anyway, so I think if you speak with anybody who is a tech veteran in China or consumer internet veteran in China, they will tell you one thing: traffic, consumer traffic. Everything is around consumer traffic. Once you have traffic, you go from high frequency to low frequency, and you build data, and you layer service on top of that. And of course, now lending has become difficult, and there are many things that you can't do. And building ecosystem has become difficult as well, because I think the government has a new anti-monopoly bureau, which has a rank. I mean, the head of the bureau has a rank of vice minister, and was just appointed in November. So which means that for the year after that appointment, the bureau probably has to show some results, because otherwise how does it justify its existence and elevated rank? But anyway, so the dynamics you see in China in super apps or whatever local services is very similar to the dynamic you see in e-commerce as well. And people talk about traffic and how do you make the consumers evolve in an ecosystem where you can layer services on top of that. I think that's partially what the methodology many of the marketplaces in Southeast Asia have adopted. I mean, if you look at what Shopee has been doing, you see similarities between what Taobao did early days. They eventually morphed into Alipay with Tmall, and now I think for the last Double 11, Shopee has been promoting Shopee Mall quite aggressively to try to get the brands to be on board. Tokopedia, I think execution-wise a little bit different, but essentially the methodology is fairly similar. C2C, get the traffic and try to monetize in different ways. The interesting case is Lazada. Go ahead.
Sorry, I wanted to ask you, is it just me, or is it like LATAM seems to be still doing quite a bit of mall online model, and Southeast Asia seems to be like all e-commerce, all marketplace all the time? Or is it too superficial an observation?
I do think that that LATAM has the sort of more or sort of a digital retailer kind of models, and which is if you observe what Shopee has been doing, is something that they're trying to move to. Again, it goes back to the argument of high frequency, low frequency. You have the high frequency C2C that gets the customers in, gets the sellers in, and of course you make money from advertising, but also you build a digital mall on top of that, where you can get brands to give you more premiums, and of course this model in China is also challenged by Pinduoduo over the last couple of years, and the evolution is still ongoing, and now TikTok is challenging. So the dynamics is not end yet. It's not end yet. So, but when we translate this into the different regions, into Southeast Asia, into Latin America, the frictions you see on the ground are very different. So many things you could do in China, you just can't do it as effectively in Southeast Asia. Classic example of one of the Chinese players, which had the brief stint in one of the major Southeast Asian countries. And their main thing is that, okay, in China, there are things which they can take a week to organize. But in Southeast Asia, because they have to deal with lots of partners, lots of stakeholders who they need to negotiate with, I mean, the timeline is just vastly different, and the expectations are very different.
And do we know much yet about why the pathways between Southeast Asia and LATAM have been so different? Is the concentration of demand slightly better in LATAM, that they can actually build profitable digital malls? So do we need to drag somebody, practitioner from LATAM, to help us crack this one?
I think we should do another session just about this, and we do a deep dive about e-commerce per se, because I mean, how this evolved is fascinating, and I think, Dmitry, your working theory covers part of the reasons, but of course there are probably deeper nuances. I do remember when AliExpress went into Latin America, their biggest complaint is that Correios in Brazil, the postal service, is not capable of adding like 5 times the workers during shopping festivals. But for Correios at that time, they said it was enough. I mean, it's enough to cover our ground. We don't need shopping festivals, and our business is going well. So I think the influence, the dynamics, and how the major platforms have been raising money, who is funding it, and all contribute to the different pathways.
Yep, separate report it is.
Yep. This is yours.
No, I think this is definitely yours. Your creature.
Okay. Anyway, so so if you look at again goes back to the super app or not. And if you look at the major companies in Southeast Asia, they get into multiple services. And I think we discussed about e-commerce. And we also discussed about the mega cities. And the truth is that in all these countries, you have a segment of the population which have good consumption power. The middle class and above, they tend to be relatively concentrated. And they tend to be served pretty well by the offline malls or other services in the past. Whereas, I mean, if you look at the methodology in China, is that you have the emerging middle class, which happened in the last 20 years. And they are very large populations in a number of cities where you can basically essentially serve with decent consumption power. And I think many of the companies are trying to adopt that kind of methodology into Southeast Asia. But I do think that Southeast Asia is slightly different. First, you only have one or at maximum two big cities in each country. And the amount of middle class, I think with the exception of maybe 2 or 3 countries, and it's actually much smaller compared to what you would see in China. And of course, when you look at Latin America, most of the companies are very vertical focused, and some of them are trying to expand a little bit into other verticals, but it's only the very beginning.
So you're basically saying that Southeast Asia is much more prone to create conglomerates and everything, including digital.
I think even if offline, I mean, if you look at Southeast Asia, you do have a number of conglomerates in each country. I'm not saying that that doesn't exist in LATAM, but many of the large groups in LATAM have been large groups maybe for 100 years or even more. In Southeast Asia, the conglomerates, most of them emerged after the Second World War, and most of them are still under the control of the second or at most third generation of the family.
All right, I have a feeling we'll come back to this when we discuss the overall framework, but we still have logistics to cover. That would be part of the e-commerce topic, right?
It is part of the e-commerce topic because again, as we see that, I mean, in Southeast Asia, you have the marketplaces pushing the volume of e-commerce going to go up, and whether you are fulfilling a $2 order or whether you are fulfilling a $200 order, it's one trip by logistic companies. So the proliferation of e-commerce orders by the marketplaces actually pushed up the demand for logistics. And of course, and when that demand goes up, investment goes in to push the infrastructure forward. So you would see that logistics investment in Southeast Asia came relatively earlier compared to Latin America. And now with Shopee going to Latin America, they might be challenging the landscape a little bit. We know that J&T Express, which started in Indonesia and now the second or third biggest player in China, has set up in Brazil and Mexico. Whether they will bring the level of competition and aggressiveness into Latin America, I think it remains to be seen.
I have a dark suspicion that because in LATAM, e-commerce started earlier and took a shape of digital malls and vertically integrated operators, the investment into logistics was hidden. It was part of the business of large companies. It was not announced in the VC-funded rounds, as opposed to Southeast Asia, where you have a bunch of marketplaces that say, hey, logistics guys, come and bid on my business. Lowest bidder wins, at which point you have a VC money running into logistics, creating 1,000 companies there.
Possible, but there's also a number of logistic companies in Southeast Asia which have built pretty large operations and are not funded by VC.
Fair enough. Yeah, absolutely.
Yeah.
All right, I should let you take a break. And my favorite topic of marketplaces and classifieds, which we have not managed to do in this report extensively. So we left jobs and real estate out, but I just wanted to single out the very interesting case of Kavak and incredible speed at which it made its way to almost $10 billion valuation compared to very okay, not quite similar, but closely related business models of Car and Carson, even though I think we haven't seen the latest of Carson yet, and they might just be on their way there as well. GDP per capita, Mexico, which is where Kavak lives for the moment, and Malaysia pretty much comparable. Obviously, Mexico is a much larger country, but then again, adjust for GDP that's generated by exports, and you will basically see Singapore plus Malaysia there as size of the economy. So what drives this? I have a suspicion that it's not really about model fundamentals or market attractiveness. It's just about the speed with which late-stage money arrived into Latin America all at once. So it's Indonesia 2018 writ large. I'm ready to be surprised and argued with, and that's why I think we need to get somebody from LATAM VC ecosystem in here, but wanted to single out this one interesting example of how from pretty low base, LATAM ends up with actually more $10 billion companies than Southeast Asia within just the first few brief years. And now, off the back of the topic of marketplaces and e-commerce and logistics, let's talk about payments a little bit. And Ray, I'll drag you into this one, our favorite debate. So interestingly enough, LATAM and Southeast Asia, in most markets we looked at, seem to be converging on pretty much the same market structure that has almost nothing to do with the original China template, even though it was very much the inspiration in Southeast Asia about 5-6 years ago, and has everything to do with, I would refer to it as India template. So each country legislates and builds some equivalent or a parallel of UPI, Universal Payment Interface, local switch that facilitates movement of money within borders, squeezing Visa and MasterCard out to the periphery. And a number of local alternative methods operate, making sure that it's convenient for people to pay, whether it's cash on delivery, whether it's cash over the counter. And the whole thing ends up in the hands of one or two major regional scale acquirers, which is to say acquiring companies like DLO and like Kuchki in LATAM. And while it's pretty straightforward evolution, Southeast Asia did take quite a detour for a number of years. So Jianggan, I think these are screenshots that you captured recently, right?
Yep.
But all the way as early as I think 2018, I remember this research by Nomura, which tracked down 800 different wallets in Southeast Asia. And I think that's just the stuff that was visible in the press. I think it's more like 1,500. And that aberration, I can't quite really, and if we go to the next slide, I can't quite really attribute to any sort of reality on the ground. So yes, sure, LATAM and Southeast Asia, they did start from slightly different level of credit card equipment, but in both markets, you have your bank transfers, you have your cash on delivery. So why would such a massive proliferation of wallets suddenly pop up in LATAM, which is absolutely not a thing in Southeast Asia, which is absolutely not a thing in LATAM? I kind of sorta blame influence of Chinese ecosystem on that, Ray. Even though WePay and Alipay are completely different creatures with completely different regulatory frameworks around them, all through 2015, 16, 17, and probably even early 18, the buzz in Southeast Asia was, it worked in China, therefore it should work here. So, and 800 wallets later, what have you got to say for yourself?
How many, I'm curious, how many wallets of those wallets still survive or thrive today?
Interestingly enough, people still keep them alive, even though if you look at the shareholding, a whole lot of wallets suddenly surprisingly changed owners and got exited and are now sitting on the balance sheet of a big bank and some such. Some are pivoting into lending operations. Quite a few quietly went out of business. I'd say we still have a few hundred. And obviously the largest ones are all attached to large local service platform aggregator platforms and to large e-commerce companies. And there are a few standalone where a single defensible use case exists, whether it's paying for premium road access or whether it's something where a government interfered and made that entity a slightly protected entity, as sometimes happens in Vietnam. But still a few hundred more than the region needs from my perspective.
Yeah, probably. I could talk briefly about what's sort of going on in China that's really divergent from the rest of the world, especially it looks like Latin America, which I saw earlier you had summarized as having a bulk of its investments go into fintech. Again, that's really not what's happening in China. So the fintech was probably a hot sector, or was a hot sector more than 5 years ago. Let's call it between 5 and 8 years ago. But since then, it's become a very, very neglected sector, partly because you do have the fact that you have two sort of dominant players who are WeChat and Alibaba, but you also have the fact that it's just not very friendly on a regulatory basis. There are multiple licenses you need to get, but most importantly, I think in the last 2 years, we've seen a ton of regulations that really restrict fintech further and really oversee fintech as more financial, or most of fintech that, the things that you see on this screen, at least, doing these functions would be regulated more by financial regulators, specifically by the People's Bank of China, than the internet regulators. So again, also China has this perspective that payments in general, and as someone living in America, I actually really appreciated that payments have to be as cheap as possible. So the government actually says you need to subsidize small merchants, and this is something that WeChat, for example, does. But even without subsidies, you can see that the average rate is 0.6% for digital transactions. So it's free from person to person. And the government has given lots of signals that it wants it to be even less than that. So the killing blow, though, is probably for fintech is that payments have to be separated from credit. And I think that is, most people's, including Ant Financial's play before these regulations happen, which is like, hey, collect a bunch of people through my digital wallet, do payments. Okay, that makes no money, but that's fine. I'm going to sell them other services. I'm going to have them make investments and lend to them on my platform. And that is now heavily, heavily regulated. It is very different from what I think is happening in the US, where you see fintech is one of the hottest sectors last year. Something like $50 billion went into fintech. It's like 20% of deal volume. And I think, based on just what I've learned today about LATAM, that it's following more the America playbook. Definitely not China. So I don't know where Southeast Asia goes.
This is what inspired us, I think. I think even though we only just realized it after we did the report, which is there was such a nice, neat framework that you could potentially attach yourself to, which is, here is LATAM, it follows US template, here is Southeast Asia, it follows China template. Let's ignore for a moment, there is not much flow of capital from China to Southeast Asia, it's just numbers. And it's all nice, neat, and falls into 2x2 metrics. But right now we seem to be actually at this very interesting intersection where the dominant narratives from China are still in the heads of the founders and investors in Southeast Asia, but the reality departed. And we are now looking at a bunch of companies that are dependent on fintech business models for survival and growth, and therefore have to study very carefully what's happening in LATAM and the US, unless all the regulators in Southeast Asia as one move following China, which I gather might not happen too soon, will be happening a little bit. So total confusion instead of neat 2x2, annoying.
I think some of the regulators are pretty advanced. I mean, if you look at the ones in Thailand and look at, how they're taking what's happening inside their country and as well as globally, and make lives difficult for startups.
Whoa, caveat though, advanced they are. Local central banks are really quite impressive. Just spent a week listening to Bank Negara's FinTech Week in Malaysia. Quite good stuff. But they are not borrowing templates from China. Templates that are being implemented, as we can see in the slide right now on the screen, are templates borrowed from India. And to a degree, LATAM, with PIX and a couple of other local switches, they seem to be following what Southeast Asia has piloted based on India's ideas. And India's ideas in turn borrowed from some of the central banking regulation in Europe. So payments ecosystem seems to be quite informative, or rather quite predictive of how, hopefully will be quite predictive of how things go.
I think whatever happened in China, we've done quite a bit of extensive research about, what enabled that to happen over the last 10 years or so. And we'll try to map that into different parts of Southeast Asia. You just don't see the same conditions to make things happen. Of course, Alipay and WeChat Pay have become duopolies, and because of the ecosystem they have invested in. You just count how many local services and e-commerce companies in China count Tencent as largest shareholder. In Southeast Asia, it's just you have different, again, going back to conglomerates, some of them owned privately, some of them owned by the state. They all have their own sort of ecosystems, and it has been pretty difficult for them to work with each other. And of course, you have the government initiatives to try to force things to open up, and with a common switch system, and that will change the dynamics. And I think whoever who is able to leverage this dynamic effectively might have some opportunity.
And now we are off to the most fascinating sector, which is kind of a perfect illustration of how Southeast Asia is switching gears and starting to build things following rails of LATAM, not rails of China. But Jianggan, I think it was your slide. Sorry for jumping in.
No worries. If you look at the top companies that get invested, you see a lot of digital banks in Latin America, and in Southeast Asia, where you look at the digital bank landscape, you see something much more nuanced. And first, every big player, every big consumer tech player is trying to either build a digital bank or invest into one, or sometimes more than one. And second is the traditional banks are getting into what they call digital banks to various degrees, and some of them are doing a pretty decent job. And third, you have all these different fintech players, which after piloting their own business models and now are trying to build a bank, and whether you can say it's for survival or for boosting their valuation or IPO prospects. So the landscape, I think, in Southeast Asia seems to be quite rich. But Latin America, the digital bank, the different pathways seem to be pretty straightforward. So we have summarized the two reasons for the sector in Latin America, why people start building digital banks. In the first place, is the transactional banking and the fees that you can potentially charge. And second is the interest rate spreads in many of Latin countries is pretty high. So there are many rooms. There's lots of room you can play with to actually disrupt. And of course, I personally do think the fact that many of the conglomerates in Latin America are not run by the family anymore also contributes to that. Different incentives. Of course, the question is that what is the digital bank? I'm not going to bore you because we don't have much time, but there have been really lots of debate about what is a digital bank, what constitutes a digital bank, what's the pathway to become a digital bank. Is it just getting a banking license? Is it offering de facto banking services? Or it's something else. So that's a question which is still evolving, and we have been doing a number of reports on digital banks, and I think come in 2022, and this is the sector that we should be watching still. This slide is kind of fascinating. We look at the cross continent dynamics across emerging markets. So in Southeast Asia, you have lots of inspirations. Maybe not as much capital flow, but lots of inspirations, lots of flow of talent and business models from China. But you also have lots of export of talent from India. If you look at many of the founders in Southeast Asia, especially Indonesia, they're coming from India. So both China and India, as far as tech or anything is concerned, is highly competitive, or in Chinese we call it evolution. So many of these business models in Southeast Asia, and some of them are trying to export that globally. And that's in the case of Garena and Shopee, both parts of the C group, and JNT, and both are in Latin America. I think JNT is now in Europe and Middle East as well. And on the other hand, we have some other ideas which are flowing across different emerging markets, and the dynamics we see as something super interesting, and I think it's something that's going to continue, and hence this is the reason why we're building this exercise, and you will see more reports coming from us about this. About where the capital is from, this is actually interesting slide, and we do see that of course local and global funding sources account for most of the deals in both regions. But when we go into a little bit of detail about what else is out there, and you would see that of course US accounts for a large portion as well, but in Southeast Asia you have the funding coming from China, from Japan, from South Korea. And in Latin America, you do have some capital from Japan, but that's largely SoftBank. And you do have capital from China, but that's largely Tencent. The others are watching, and they've been watching for a while. And I think there's going to be some push, either looking for opportunities that no longer exist in China, or get jealous about others getting returns. I do think that the capital will spill over sooner or later. What's next? That's Dmitry, the working theory.
Right. What's next is us, I guess, spending a year figuring out how to bring all of these disjointed insights and theories and thoughts together into some sort of a working framework. So what you see in front of you is going to be very much refined and made much easier to use. But by the looks of it, having studied a few comparative pairs of markets, seeing how they took different turns and different verticals, it looks like 4 factors are at the forefront. And if you have these 4, and if you look at any given new market that joins digital revolution, you can start making some somewhat educated assumptions as to how its evolution would go. And the factors are: what capital is available, when it is available, and at which stage. Do you just have a few late stage mega deal checks and that's it, and nothing else in seed, Series A, Series B? Do you have a healthy stack of Series A, Series B, Series C? Do you have healthy stack all the way, but only in just one market and everybody else is out in the cold? Hugely important in shaping perceptions, expectations, how founders choose to spend 10 to 20 years of their lives. Secondly, classic one, just basic macroeconomics. Where do you have demand concentrated, and which value chains are actually there? Are we talking about relatively primitive economy that just exports coal and does nothing else? Or do you have nuanced ecosystem of local services, local consumers, local banks, this and that? And are they all neatly concentrated in one city, leaving the rest of the country in poverty? Or do you have to serve 20 provinces and 80 cities? The much more nuanced parameter is the one that I call, and we should come up with a better name for it, key reference templates. It's bits of assumptions and theories that live in the heads of investors and most prominent founders that may or may not have anything to do with reality. Example of that we just discussed was the replication of super app theory from China, even though there is not even a super app theory in China. Or fascination with wallets as a way to crack payment system, which turned out to be, if I may say so, quite misguided. But yet that stuff dominated the ecosystem for years and directed quite a few $1 billion from where they could have gone. And the fourth bit is back to good old Soros theory of reflexivity, if I call it correctly. And that is, how do offline incumbents react to arrival of digital? Do they sit there quietly thinking it's a fad, or do they transform themselves into a crypto-first banking agglomeration like a certain Thai bank just did recently, or something in between? Surely there would be 25 more factors, but if I had to choose 4, these are the 4 I would choose to look at any particular Chile or Uruguay or Philippines and try to understand how payments, entertainment, travel, job markets would evolve as far as digital tech is concerned. Everybody, welcome to send me comments. I look forward to your emails on how wrong this is.
So we'll be distributing a copy of this afterwards, and we have actually made a few predictions, but these are the pointers that we have run through throughout this presentation. And I think we're a little bit out of time, so I will not bore you with more details. You can read on your own. But we do think that the cross-pollination will take shape in a much bigger way moving forwards, and we'll see more interesting things that we can benchmark across the different regions. With that, we would like to thank a few people: Lafka, PitchBook, Caixin Global, Venture Cap Insights, and Deal Street Asia. They have been doing a lot of the work, looking at the numbers and looking at the deals and trying to analyze the information. So much of what we have built here is based on a lot of hard work done by them, and I think collectively it's a very, very meaningful exercise. There's one question which we'll probably not have time to go through in detail, but Li Jin, I think we will address your questions, and because we're running out of time. But thank you everyone for joining us this morning or evening, and I hope you have a happy and prosperous New Year.
And I apologize for rambling for so long and not leaving any time for questions. Thanks everybody for coming, and Ray, thank you for finding time in your evening for us.
Thank you. Thanks for having me.
Thank you. Bye-bye.
Cheers.
I will close the meeting room. Thank you, everyone. See you.